We don't know, but maybe Brent Thill does. His tech research analyst at Jefferies got a buy rating on Alphabet and just raised his price target to 230 from 210 today. He's also got buys on Meta, Microsoft, and Amazon. You know, we like to lump them in together. There's acronyms and things like that, Brent, which I'm sure you're aware of. But all these companies ultimately do different things. Is there a read-through on Alphabet that might give us confidence about any of these others that you cover?
Yeah, I don't think it's a one-hit wonder like Britney Spears. I do think this is a good sign for what's going to happen at Microsoft with Azure. You look at the Google GCP number, and all the incremental raise and the CapEx from 75 to 85 billion is all going to the public cloud. That tells you that Amazon AWS is probably seeing the same thing. That should be bullish again for Amazon, given it's the majority of their market cap embedded in their cloud business. Secondarily, for Microsoft with Azure, you're seeing it in Oracle with 100% backlog growth in the build-out in their infrastructure for AI. So we're very much in a get ready for AI. AI applications have not rolled out to enterprises. We're still less than, call it 5% of total revenue from the software industry is in AI. So we're in this critical lay the foundation, concrete, trim the trees, put the concrete down. That's all in these infrastructure names. And we don't think that this is a one-hit wonder. We do think it's a direction. Many of our field checks have suggested that since the tariffs, many of these enterprises have gotten more confident. They've got more bullish to spend. They know they have to move forward, and they have to get ready for AI. And many of these large enterprises are still 70, 80% on-prem. They're not even in the cloud. So you can't do AI until you basically consolidate and centralize your data, and then you can do AI on top. So we are still seeing what we would call get ready for AI. We're, again, I think years out from really monetizing this in a big way in the application sector.
It's reassuring. I don't think Britney was a one-hit wonder. I mean, she had a couple of songs, Brent, right? At least two.
Leave Britney alone.
Yeah.
All I remember is oops, I did it again,
In
which
fairness,
I make mistakes all the time. So that's all I remember.
I'm like, you know what? And the full passage of time, maybe she was. But so for investors who think this is old news, it's time to rotate. So rotate into healthcare, rotate into whatever state. I don't know where you go. European financial. I mean, you think this has legs, it has runway. People are not going to be disappointed that they came into what some would say is the best performing sector of the market at one of the times that it's been nearest to its all-time high in terms of general S&P valuation.
Yeah, I mean, I think there are valid concerns. And I'm a tech analyst, so I don't cover other sectors. But I would say that, we had a big fear at the beginning of the year in macro, and all these stocks did nothing. And then we've ripped now into the face of a better environment. And the CEO of IBM said something very telling on the earnings call last night. He went from cautious optimism to optimism. And IBM's results were mediocre. But Arvind is a great leader, and I respect what Arvind has to say. And when he is seeing in his global travels, deal velocity improving, deal sizes picking up, getting ready for AI, all these things, I think we're still at the beginning of this build out. And you look at the percent of AI deployed inside enterprises, it's tiny. You and I pick up our phones every day on ChatGPT or Perplexity or whatever app you're using for AI. I mean, it's basically the first, it's become common. It's not common in enterprises, and we're still at the beginning.
Sorry,
I think that's going to take time.
Sorry to interrupt, running out of time. So you just made the case of why people thought Google was dead. Right, is that we're not Googling stuff as much. I mean, I guess we are, but it was a thought that, Kelly and her husband, they're huge into AI. They don't Google anymore. They chat GPT it or they Claude it on Anthropic.
Yes.
Right? So it sounds like Google's not dead.
It's not, but the perception that it's going to hit them is waning. I mean, if you looked at those numbers, I'd say the stock is going to be up 5+%. It's up 1.5%. Because it's the inevitable fear that AI is going to get them. It's the boogeyman that comes out of the closet. And again, when we opened this door this quarter, it was like Monsters Inc. when the monster gave the kid a hug. It's not as big of impact short term, but it's weighing that we will Perplexity or ChatGPT or summer holidays, whatever. We don't need Google in the next year, and that is weighing again on sentiment, where investors look at Microsoft, they look at Amazon, they look at some of the other names and realize that's not the case in these situations. They're not on these incremental, these inflection points. Google's definitely an inflection. They're doing a great job, by the way, of embracing the change. But I think investors still don't believe, and they're in other names. The sentiment's the worst of Google of any name I cover. Most of our institutional investors are underweight Google and overweight Microsoft, Nvidia, many other names right now. And I think it's going to be that way till we have further proof that they can, for multiple quarters, put together what they just put together in this last quarter.